tech and e-commerce giants Microsoft and Amazon, which are two of the Magnificent Seven companies, have been downgraded by my next guest to neutral from buy. He says it's time to take a more cautious stance on hyperscalers. Let's bring in Alex Heisel, analyst at Rothschild & Co. Redburn. Alex, thanks very much for joining us.
Thanks very much for having me.
Going against the grain, what are your reasons for this?
The work really shows that we have done is that the market is already pricing in, a very optimistic scenario in terms of like how much value generative AI really creates for both of them, for Microsoft and for Amazon, because everyone is still using, the traditional cloud playbook where the hyperscalers have been the kings of the cloud 1.0. And so if you look at it from a capital deployment and value creation perspective, in the cloud, they've converted one CapEx dollar in $1.4 of NBV. With generative AI, we're talking about one CapEx dollar of 20 cents of NBV. So I think there's a big mismatch. And unfortunately, we don't see a clear path for both of these companies to revert back towards these cloud 1.0 economics, because now you also have like new platforms in the game in the form of like Anthropic and OpenAI, because they are not just the apps that consumers see. They act as a platform layer, and that's where the value is. So it's much more competitive, and we see the risk that the hyperscalers operate much more in the lower part of the stack.
Now you have Microsoft. You mentioned Anthropic. Microsoft's investing $35 billion. Is that not going to ease that or ease your fears a little?
I mean, what will happen is Anthropic will use Microsoft infrastructure as it does with AWS and GCP. But for the hyperscalers, it mainly means like server rental and maybe some auxiliary services. But the value really accrues to the likes of Anthropic and OpenAI. So we have to really differentiate what is like a server rental versus like what is like the product on top of these servers, and who actually captures the value in this.
What are some numbers you would like to see that would make you feel more comfortable with them?
What I would like to see is sustained reacceleration of growth, but CapEx coming down. Because unless we see this scenario, then the only conclusion that you have is the cost to grow are really high. If we would see CapEx coming down and the revenues accelerating, it means that basically the revenues per unit of compute is going up. That's what we need to see really to reassess our view.
And one of the things, of course, everybody's talking about AI, but also the other thing that we've been talking about is quantum computing. Where are your thoughts on that? Where do you see these companies going with that?
I'm probably not the right person to give you a really good insights in quantum computing, because my focus is really just on the hyperscalers.
On the hyperscalers, and
yeah.
And how much of an impact do you think NVIDIA's earnings today, when they come out after the bell, will have on these two, on Microsoft and Amazon?
I think the impact will be quite limited, because we have been in this period where the market has rewarded growth and CapEx, but with the recent earnings season from the hyperscalers, Amazon and Microsoft, the growth was decent, but the market is starting to look beyond the surface level top line and also like the RPO figures. So I don't think there's much of an impact, because investors we speak to all try to get a head around what the value is. So I think it's getting much more nuanced, and I don't think there's any real impact from tonight.
Okay, and what gives you this confidence on these two with this?
Because that's what I spent most of my time. I really focus on the hyperscalers, Amazon, Microsoft, and also Oracle. And I think what gives us confidence is because since we've launched in June 2022, we have been defending these companies throughout that period. We had an above consensus view in terms of like reacceleration, and it was a challenging time. So we had to turn every stone, and we wouldn't have made these changes without being very sorry in the work we have done.
And do you feel moving forward they have the abilities to adapt and change?
I'm sure they do. I mean, just to be very clear, the returns on this, generative AI deployments, being it like GPUs or for AWS Trainium 2, they're still okay. So we're looking for an IRR of like 15-16%, but it's not the same as the cloud 1.0. And what we said is the problem is the market still prices these companies as if it was still a cloud 1.0, meaning that there is a belief they can revert back to where they have been, and I think there's just no clear path towards this.
Okay, Alex, thank you very much for joining us today.
Thank you very much for having me.
Alex Heisel is an analyst at Rothschild & Co. Redburn.